Hello, Francois.
Hello.
The dollar's been in the spotlight recently, last few days. Jamie Dimon of JP Morgan, amongst others, Bank of America, and Mr. Nateb as well, have been warning about the wall of debt that's facing the US economy. And Bank of America has calculated that US debt is going up by 1 trillion every 100 days. Within that, I'm not sure if they're including the 1 trillion debt, 1 trillion of debt that's being added just because of debt financing, which is the amount that the 34 trillion wall of US debt has reached now. What are your thoughts on this and the US dollar, for instance, which has been ticking down a little bit the last few days?
Okay, the issue of the US debt is a major issue for many, many quarters. You know, when you look at, for example, international organization, last year they were pointing quarter after quarter to the point that the US debt needs to be tackled. But you have something that you need to put that in perspective. Yes, the US debt is growing. But the issue of debt is something that is affecting all major economies, from China to Europe to Japan. Everybody, we all know, due to the fact that we lived through the period of quantitative easing and very, very loose monetary policies, we all know that this kind of fiscal dominance, which is the fact that the debt increased significantly, is an issue that we need to deal with for the coming years. So, yes, I can understand that people are pointing to this issue right now, but this is not something that is coming out of the woods suddenly. This is a fact, this is a reality, and I strongly believe that this is one of the arguments where, for the medium to long term, you need to be careful with the US dollar, because this is an argument that I have pointed forward for many, many months, that at the end of the day, people who are still very bullish on the US dollar should be careful with the debt. That's something that I have in my mind when I look at the US dollar for the medium to long term.
Do you think, from memory, the US president doesn't take effective office until January? Therefore, we have effectively 9 months of overspending in inverted commas. Um, do you think this is something that could push the dollar down in an election year, or will they wait until the results of the election?
I would have 2 points on that. One of the reasons why I still remain with the view that the US dollar is going to fall below 112 against the euro in the coming year is exactly what you mentioned. Is the fact that at the end of the day, there will be a period of uncertainty, there will be a period of political uncertainty. That's the first thing. The second thing is that when you look at the rerun of 2020 with Trump and Biden being the potential candidates to run in November, you have to keep in mind one thing. Donald Trump promoted what at the time I quoted as the worst ever tax cut made in the US. And one of the bigger problems is that if Trump is elected, it means that he will again favor the fact that by 2025, he will promote again the continuation of this tax reform that was put in place in 2017. So it's not going to solve the problem of the US debt medium to long term, because it means that it doesn't want to deal with that, except through, he thinks, the growth rate. He believes that the growth rate can make the US able to deal with the debt issue. On the other side, you have Biden. Biden, if he's elected, will face issues because it's going to be very difficult in the very short term to deal with structural issues in the US, which are the healthcare reform, which is necessary because healthcare is costing a lot of money in the US, the social system that is also costing a lot of money. So those structural issues will remain with the US. So at the end of the day, this election is a key event for the debt because you don't have the impression that you have one or the other candidate able to promote a vision to deal with this issue in the medium term.
So you're saying that even though the Republicans are fighting against, or have fought in the past recently against a rise in the debt ceiling, you're saying that a Republican election with Trump as president would not start to bite into to bite into the ever increasing debt levels.
I think so, because to consider that the core of your fiscal policy is to promote an extension of the tax cut that they did in 2017, is not going to solve the issue. Except if you tell the truth to people, is that you need then to cut spending. And where do you cut your spending? You can cut it maybe on the military side, but where you need to cut the spending would be on social programs.
Where could you've talked about a level of below 112 against the euro, I imagine you're talking about. Where could the dollar go down to?
I don't think that there is a lot of potential for in the short term. And short term, I mean the next 12 months. I don't see the dollar going to 120 against the euro. I don't think it's feasible because you need also to keep in mind a few things. First, economic activity in Europe remains much lower than in the US. That's the first thing. Second, interest rates in the US are higher than they are in Europe, and it will remain the case, to my point of view. There is also one of the big chance of the US dollar at the end of the day is the famous word by one of the treasury at the time, the dollar, our currency, your problem. And there is no alternative to the US dollar in terms of I would say, the reserve currency of the world. And the European can be part a substitute to that, but to a limited extent. The Chinese has no ability to offer an alternative to the US dollar. So the point is the dollar remain and will remain in the short term the reserve currency of the world, even if you have some diversification out of US dollar. And lately we had also an event that we need to keep in mind is the fact that gold price suddenly have surged quite a lot. And it is not necessarily connected to retail investors. It is in large part connected to position taken by hedge funds and increased reserve by central bankers who are purchasing, China in particular, are chasing gold and increasing their gold reserves.
You've been positive on gold for quite a few months now. You were calling, I think your range was about 2150. We're gently approaching 2,200 now. I think we've broken into a new trading range in gold. What do you think that new trading range is? How high do you think it is? 2,500 maybe?
I would first go to 2,300. I think that that's something. The range that I would set for the price of gold now is 2,000 to 2,300, and I think that we can go in the coming 9 months with what you mentioned, the fact that you had the election coming and people could have some doubt on the US dollar. We could go to 2,300, and normally, listening to what Mr. Powell said last week to Congress, they are very close to lower interest rates. You know that I still think, and I have defended the idea that June should be the month where the Fed is going to cut interest rates. And I still think that they are going to cut interest rates 3 times by the end of the year. So I think that those developments should push gold to 2,300 by June, and it could extend to above in the next 12 to 18 months, because I see an environment where interest rates are going to be lower than they are right now, and there will be these uncertainties. One thing that is very interesting, because you question, it's always difficult to set a price target on gold, but I read a few things. In 1980, the price of gold was 850 US dollar. If you add to reach the same level in terms of taking into account inflation, the price of gold today should be around 3,000 US dollar. So it means what? It means that there is margin for gold to go higher, to my point of view.
You mentioned no alternative to the dollar as the world's reserve currency. There's been a lot of talk about the BRICS digital currency. You're not somebody who believes in that being able to be something that could work?
Alors, the thing is that digital currencies are, I would say, they are not they are at the beginning of the process. So for the time being, I don't see in the short to medium term, which I would say the next 1 to 5 years, I don't see digital currency to be a substitute for the dollar. Down the road, maybe it's going to be the case, but you need to see how the system is going to work and at what speed will digital currency be a substitute for real currencies.
So let's talk about bonds now. Although we need to talk about the week ahead and the numbers coming out this week, and I think those two are probably related as well. So that can be probably part of the topic for the next few minutes. Bonds seem to be in no man's range. They're kind of ticking around above. 10-year is ticking around above 4%. Where do you think the next move for bonds are, and what are they waiting for this week? What are they going to be looking at?
Clearly, we are in the week of inflation. You know, you will have on Tuesday, you will have CPI, and on Thursday, you will have PPI in the US. So those two factors are really key factors this week because people will look at those numbers. They will check if the disinflation process that people are expecting to continue is really going to materialize. So those are the numbers, the main numbers people are going to watch this week. Yes, it has a significant impact on the bond market. You mentioned that we are around four. We were on Friday at 407, but do not forget that during the last few weeks we were closer to 435. There was a significant reaction to the downside. It was also connected to Friday's numbers that came out. Not only the fact that the non-farm payrolls for January and December were revised downward, but to the fact that one other element of inflation, which are average hourly earnings, were lower than expected. So people have in mind, and the bond market clearly at the end of last week was under the influence of the fact that people say disinflation is possible. Because remember that when we had the publication of the last CPI and PPI numbers, for January, people had doubts, and suddenly the bond market faced significant upward pressure on yields. People now are buying again the idea that there will be 3 rate cuts this year. Even some believe that there were 4, while early last week, people were speaking of 2 rate cuts or maybe no rate cuts. So it tells you a lot about the fact that bond markets are very sensitive to inflation news in the current environment.
If some people are talking about rate cuts, others are starting to talk about rate increases for the first time in 20, 30 years. Japan, the spotlight's on Japan in terms of the the, the sentiment coming out of the central bank and what they're feeling. And it seems as though the central bank is saying that they would accept an end to negative rates. How's that going to affect their stock market and the yen?
It is already, because you know, it is already affecting the stock market and already affecting the yen. The yen was above 150. It's currently trading around 147, 147. If you remember, we discussed this
Against the
issue.
dollar.
Yeah,
Yeah.
against the dollar. We discussed this issue a few months ago, and I told you that maybe in 2024, the BOG was going to increase rates or stop the zero rate policy, and that it would bring the yen to 135 against the US dollar. Because you had some numbers coming out of Japan on GDP numbers for the fourth quarter, and because of the tsunami that happened, the small tsunami that happened in Japan, expectation for rate cuts in Japan were significantly reduced by the end of 2023. What is interesting is that this morning, the GDP number for the fourth quarter was revised upward. It means that people are considering that there was no technical recession in Japan. It opens the door, to my point of view, to a change of course of monetary policy by the BOG. It will support the yen. This is something that is not necessarily very positive for exports. Look at the behavior of Toyota this morning in the market. Toyota was down quite significantly, and it is connected to the strength of the yen. So I would say it will have an impact on the stock in Japan. Don't forget that you have 2 elements that are supporting the fact that investors are very keen on Japanese stocks. On the one side, you had the fact that the yen was very weak and that monetary policy remained loose. On the other side, you had what people call the corporate governance change in Japan. So it will be, in the coming months, a very interesting test for the thesis that Japanese equities are benefiting from a corporate governance change that is helping the equities over time.
On that note, thank you very much, Francois. Let's speak next Monday.
Thank you. Bye-bye.
Bye bye.